Let's open up our ag commodity trade here on a Friday, shall we? And then we'll get some commentary in just a second. Let's take a look at the corn board and see how we're opening up. On the corn market at this point in Chicago, we're just fractionally weaker. We have December down a half cent at 372, and the entire trading range is just barely over 3 cents wide from the entire overnight session there. March down a half cent at 384 and a quarter this morning. Let's take a look at our soybean trade here. First of all, on November, we are now seeing a softer market developing. We have the soybeans on the November contract at 8.85. That would be down 3.5 cents. And now you have January down 3.5 as well, and it's under $9. We're at 8.99 and a quarter. And this is significant because we have another overnight export sale related to the soybeans here, and it was 126,000 tons of soybeans. They were sold to China. So continuing that string of purchases that they've been making, it is for the current marketing year here. So even with that news coming out this morning, we're trading lower again. What about our wheat market? How is it opening up? Well, in Chicago, we have that December contract actually going higher by about a nickel. We're at 4.89 and a quarter. In the Kansas City wheat, we have December trading about 2.5 or 2 3/4 higher at 4.11. And we have had the Minneapolis wheat actually getting its footing again, and we're now trading on December 4 1/4 higher at 5.53. I want to turn to Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri, and get his thoughts on this. Lots of talk about the harvest activity picking up, but we're getting toward the end of the month, and there's a lot of discussion over what's going to have more impact on the trade. Is it going to be the weather? Is it going to be month-end profit taking? Is it going to be China trade deals, Japan trade deals? What do you think is going to be driving the corn and soybean trade first?
Yeah, good morning, Marlon. It's always good to talk with you. We are seeing a little weakness here. Monday, we'll have quarterly stocks and small grains production summary report. So there's a lot of things that are factoring into the market direction in here. Corn stocks, soybean stocks, both expected to be larger than year-ago levels. Soybeans are going to be almost 2 times as large as last year. And that's kind of keeping a lid on some of these rally attempts for the grain markets. The onset of harvest is kind of here as well, and it's tough to rally these markets unless we start to hear some real adverse yield numbers. But certainly the exports numbers this week for soybeans was a supportive number, and we've had 3 sales this week of China buying our U.S. soybeans, and so that has to be a supportive feature as well longer term. So we're testing some support areas which probably are going to hold, but I don't look for us to have any big rallies until we get past that report on Monday.
Have you seen any evidence of basis levels changing around the country on the corn or the beans?
Basis has started to narrow in some areas of the Midwest where the harvest is going to be a little bit lackluster there. You know, parts of the Eastern Belt tightening basis because the crops won't be as good, but some parts of the Western Belt we are actually hearing a little bit of widening in some new crop corn basis. Not a tremendous amount, but 1 or 2 cents this week as it kind of leaks out as we start to get a little bit more harvest activity.
Okay, thanks, Brian. Sit tight. We'll come back and we'll take a look at our livestock open as well. Brian Hoops is our guest, and we'll be back after this. Let's open up our livestock trade today, shall we? Let's look at live cattle first, and it looks like we're having a higher start in the livestock trade. December live cattle now 47 higher at 109.22. February up 38 cents this morning. If you look at the feeder cattle open, currently, we'll go ahead and go with the October contract. It is now 30 higher at 143.40. We have November 58 higher at 142.03. You will note September is gone now. And looking at the lean hog trade, on the lean hog futures, we have the October 58 higher at 64.80, December 50 higher at 70.88, higher across the board pretty much. And we go back to Brian Hoops. Brian, that is a positive start here on the livestock trade this morning. As you mentioned earlier during the break, we have that hogs and pigs report coming out after the close today.
Yeah, we're hearing a little cash cattle trade starting to leak out. Some 103 is being traded in Texas. Some 103 bids in Kansas so far have been passed. I think that's contributing to this rally in the cattle market. Of course, steer weights were down a couple pounds as well. That's a supportive number, takes the less tonnage off of the market. Hogs should have a lot of positioning ahead of that hog and pig report. It looks to be a little bit bearish, but we've probably factored in or dialed in a lot of the bearishness already. and market here seems to kind of be shrugging off that pre-report estimates that are calling for some big numbers that are expected to be released this afternoon.
Yeah, they've been talking about that pretty much all week long, about the fact that they expect pretty high numbers in that hog and pigs report. So maybe that's one of those that they have faded already, as they say. Brian, thanks for the outlook on the markets here this morning. I appreciate it very much. Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri. I want to share some slaughter cow numbers for you from the market last week. These numbers provided by Ed Serwin of CZ Cattle Market Analytics. He's in Amarillo, Texas. So looking at our slaughter cow data from last week, we had total receipts of about 6,900 head. And that compares to 6,100 head the week before. The market on those utility cows was $50 to $61. That compares to the previous week when it was $48 to $59. So we had the cutter and lean type cows bringing $50 to $60. They compared to $43 to $57 the week before. You can tell the upper end of the range there was about $3 higher on the cutter cows. Utilities were about $2 higher on the upper end. Let's take a look at the dairy cows and see what they were bringing on the utility type. They were bringing $51 to $61 yesterday. Well, that would be about $3 higher than the previous week. And the dairy cows on the cutter side, they were bringing $40 to $55. We'll call that about steady to $1 higher in that market. Cow cutouts were worth $173.87 last week. That compares to $175.24 the week before. The 90% trimmings were bringing $222.45 last week. And that would be down not quite $1. It was down about over roughly 70 cents from what we had the previous week. So again, our thanks to Ed Serwin for all that data on the slaughter cow market, John.
Okay, thank you very much, Marlon. And if you didn't have breakfast, this next story may make you hungry.